Okay, good evening. I'd like to talk about the new Money Hub project. So we're sort of in the, we see the original crypto anarchy movement as the origin of something that created Bitcoin. We had fiat money on the blockchain, we have smart contracts, and I see the future, one of the futures is putting money proper on the blockchain. Money that would be born, live, and die on the blockchain. Now, money basically is not an asset, money is a contract. You have to understand that all the money that's in circulation today, or most of it, is based on debts issued by individuals and companies. Now the fact is that in our world, the banks actually create the money, and not individuals and not companies. Now the human element is the following. The human background is that humans are not very good in situations of anonymity and in large groups. It doesn't bring out the best in us. One way is sort of shown by social media networks, where you have this concept where you only interact with a smallish group of people, although the network itself is very large. So one of our goals is to make money more personal, bring money closer to the people. In order to do that, we want to create a system, a platform, that's actually very generic, on which you can create all kinds of money systems. You can create your central bank fractional reserve banking system. You can create a purely P2P money system and anything in between. So how does it work? The basic relationship in the system is going to be a credit relationship between two parties. The parties can be anyone, individuals, companies, banks, whoever. Between two parties, the relationship is going to be based on smart contracts, okay? Because financial relationships, financial credit relations are complex things. It's not enough to say, I give you credit up to a certain amount, or you give me credit up to a certain amount. There are conditions. We will provide standard smart contracts that will be configurable, but they'll be standard, you can choose. Or you can create your own smart contracts to fit your needs, okay? You can mix and match. So it will be interesting to see what kind of systems emerge once the tools are available to create new money systems. That's what it's about. It's creating tools, and we'll see what happens. Of course, you can create new currencies, you can have groups of people creating their own credit. So it's an open slate, okay? Now, why do we decide to do this on blockchain? First of all, blockchain gives us, okay, it's decentralized and robust. And just to finish, I'll just say that the nodes we're going to work on are not going to be anonymous. We have a concept that the validation procedures on the blockchain will actually reflect actual legal agreements. Okay, thank you.
So do we have any questions for Alex? There you go.
Hi, Alex. Thanks for the presentation. My name is Natalia, and I'm wondering who is your first main target as a user for your smart contracts? Is it institutions first, or businesses, or are you aiming for individuals, privates?
We see in the short term two targets. One, which may be the lesser one, are local currencies, which do exist. They're usually very small. And these local currencies, they don't communicate with each other. If we put these local currencies on the same system, they might begin to interact. Now, the main use case we see are microcredits. Today, small companies in developing countries pay a lot for microcredits. Some of them don't actually have access to microcredits. And if they started issuing their own local currencies, they would need less microcredits. So this would have a big impact on their lives. Okay, just so you know, obviously in Europe, systems like that are not legal and will not be allowed by central banks. So this is not a short-term market for us. Developing countries are not a short-term market.
Hello. So you're solving the problem where smart contracts ultimately aren't tied to the underlying asset. So your asset needs to have value to it. How do you achieve sort of penetration so that your asset actually obtains enough value to be worthwhile to use?
We have to understand the asset is the credit. There is no asset. The credit, giving of credit, creates the asset. This is a credit system. Okay? There are no external assets. You could possibly have a credit arrangement with someone and specify this in your smart contract that an external asset guarantees that contract. But as such, a basic contract is simply a debt arrangement.
Okay, thanks.
Hi Alex, this is Kimberly. Thanks for your talk. I'm just wondering, how does your system relate to cryptocurrencies like Bitcoin?
But it doesn't. It relates to the real world, to real debits and credits that happen. I would say it relates to Bitcoin in as much Bitcoin has brought the blockchain technology to the fore. Okay, so that's why we want to use blockchain technology. And we have actually some ideas about how to make blockchain technology a bit more realistic from a business perspective. For example, the fact of not having anonymous nodes for us is very important, okay? Because we're talking about money, about actual debits and credits in the system. We don't want anonymous nodes like in Bitcoin. We want to know who the participants are.